Hi friend, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on single entry and this is lecture number 5 and you can see the other lectures in the playlist section of the channel. Following is the position of assets and liabilities of Matis who keep his books by single entry. So we have a balance on 1st January 2020 and on 31st December 2020. Debtors 5,300 and 8,800. Creditors 1,500 and 1,950. Stock 1,700 and 1,900. Fixed asset 2,140 and the closing balance of fixed asset is given as 1,740. The opening cash and bank balance is unknown. We have to find it out. And the closing cash in hand and at bank is 410. Following other details. Total sales including cash sales 500. So we have a total sales of 10,000 and cash sales of rupees 500. Total purchase is for 4,500 and cash purchase is for 2,050. General expense of business is rupees 1,000. Drawings 300, payment for fixed asset is 500, stock of rupees 500 was used by the proprietor for his personal purposes and material of rupees 50 was used for constructing a part of plant. Allow interest on capital at 5% per annum. You are required to prepare a trading and profit and loss account for the year ending 31st December 2020 and a balance sheet as on 31st December 2020. So whenever we are going to solve a problem on single entry, we have to open the opening balance sheet. So here I am writing in the books of Matis, who is the proprietor. So at first, I have to prepare the opening balance sheet. So, balance sheet as at 1st January 2020. Liabilities, rupees, assets, rupees. Then I have to prepare the closing balance sheet. So, here I am writing the balance sheet as at 31st December 2020. Liabilities, rupees, assets, rupees. Beside this, I have to prepare the trading and profit and loss account. So, I am writing here trading and profit and loss account for the year ended 31st December 2020. So on debit side I am writing particulars, then rupees, and on the credit side I have to write particulars and rupees. So again I have to prepare the structure for debtor account, debtors account, then creditors account. So in debtor account I have to prepare this in T form. That is on debit side and credit side. Then the creditor account, and the cash and bank account. So we have only the cash and cash in hand and at bank. So double column cash book we are not going to prepare. So simple, a single column cash book I have to prepare. So I am writing here cash account. So on debit side we have to write the receipts, rupees, and on payment and on credit side I have to write the payment, rupees. So these are the basic ledgers that you have to prepare whenever you get a problem on single entry. Now, as I will progress the solution, we have to prepare further accounts as and when required. So let us first post the figures which is given in the question. So the first figure that we have in the question is regarding the debtor balance. So in your question, there is no ledger that has been prepared. So whatever figures we have in the question, we have to post it in two places. So the opening debtor balance, you need to write it in the opening balance sheet. See, you have already prepared the structure of the opening balance sheet, and on the asset side I am writing debtors. And you have a balance of 5,300. So again, you have to post this figure in the debtor ledger. So in the debtor ledger, I am writing here to balance BD 5,300. Then we have the closing figure. The closing balance will be recorded in the closing balance sheet. So in the closing balance sheet, I am writing debtors rupees 8,800, and in the debtor ledger I have to write the closing balance. So here I am writing by balance CD 8,800. So the opening debtor and the creditor balance I have posted. The next figure is the creditor balance. So in the creditor ledger, I am writing here the opening balance on the credit side by balance BD as 1,500, and the closing balance I am writing on the debit side as to balance CD 1,950. And in the opening balance sheet, I will write the creditor 1,500, and in the closing balance sheet I have to write creditors 1,950. Next we have the stock. So the opening stock I am writing in the opening balance sheet as 1,700, and the closing stock I have to write in the closing balance sheet as 1,900. So opening and the closing stock will appear in the trading account. So in trading account I am writing to opening stock 1,700, and the closing stock will appear on the credit side of the trading account as by closing stock 1,900. Next we have the balance of fixed asset. So fixed asset will appear, the opening balance of fixed asset will appear in the opening balance sheet as fixed assets 2,140, and the closing balance of fixed asset will appear in the closing balance sheet as 1,740. The opening and the closing balance of fixed asset, we have to post it in a separate ledger of fixed asset. So I have not yet prepared the fixed asset ledger. So I am writing here fixed asset account. So the opening balance I am writing here on the debit side as to balance BD 2,140, and the closing balance I am writing as 1,740. The opening cash balance is unknown, so we will find it out. So in the opening balance sheet I am just writing cash and bank, and in the closing balance sheet I am writing the cash and bank balance as given as 410. So cash and bank balance is 410. So I have already prepared the structure of the cash account. So the opening balance is unknown to me. So I am not writing the opening balance here. But the closing balance is 410, and which is a debit balance. So I am writing here on the credit side as buy balance CD 410. So this way the opening and the closing balances of debtor, creditor, stock, fixed asset and the cash and bank balance I have posted here. Next I have to record the transactions given. So total sale is given as 10,000 rupees. So in the trading account you have to post on the credit side. I have to write here as buy sales and cash sale is given as 500. So credit sale will be 9,500 because the total sale is given as rupees 10,000. So the cash sale I have to record it in the cash book. So in cash account I have to write 2, or you just leave one line because the opening balance either it can be a debit balance or a credit balance. Let us find it out. So just leaving one line here. In the second line I am writing to cash sale, or you can simply write here as to sales. So your journal entry is basically cash account debit to sales, and the cash sale is rupees 500. And regarding the credit sales, you have to record it in the debtor account. So in debtors account I have to write debtor account debit to sales. So debtor account debit to sales, and this is the credit sales, which is 9,500. Then it is given as total purchase is 4,500. So in the trading account I have to write 2 purchases. Cash purchase is given as 2,050 and the credit purchase will be 4,500 minus 2,050, that is 2,450, and the total purchase is 4,500. There are 2 more transactions which is related to purchase. You can see it in the question. One is the drawings made by the proprietor for rupees 500 and material of rupees 50 was used for constructing a plant. So for these 2 adjustment I will record it in the purchase, and just after some time after posting the other figures. So in the inner column I have recorded 2 purchases. Cash purchase is 2,050 and the credit purchase is 2,450. And you have to record it. The cash purchase will be recorded in the cash account. So in cash account I have to record it by purchase account 2,050, and in the creditor account you have to record as a buy purchase, that is the credit purchase is 2,450. So total purchase you have to record it in the trading account as 2 purchase, cash 2,050 and credit 2,450, and in the cash account you have to record as buy purchase in the cash account, and in creditor account you have to record as buy purchase 2,450. The next transaction given is general expense of business. So your journal entry is expense account debit or general expense account debit to cash. So in cash book I have to record by general expense account 1,000, and in profit and loss account you have to record the general expense. So in the beginning we have to prepare the trading account, and leaving some space here I have to prepare the profit and loss account. So I am writing here to general expense. And the amount is rupees 1000. Next is drawing rupees 300. So journal entry is drawing account debit to cash. So in cash account, I have to record as buy drawings 300, and in the closing balance sheet, I have to record as opening capital. I will find it out, the opening capital, and then just below it I am writing drawing rupees 300. Next is the payment for fixed assets. So in cash account, I have to record fixed asset account debit to cash. So there was a purchase made of fixed asset. So I have to record as buy fixed asset. In cash account, you can see I am writing buy fixed asset account rupees 500, and in fixed asset account I have to record to cash account rupees 500. So this way I have posted the entries given for the transaction of total sales, total purchase, general expense, then drawings and payment of fixed asset. Then in the additional information it is given stock of rupees 500 was used by the proprietor for his personal purposes. So your journal entry is drawing account debit to purchase or to opening stock. So from purchase I have to reduce the amount of drawings, that is for rupees 500, and in the closing balance sheet I have to record this transaction of drawing for rupees 500 as less for the drawing of rupees 500. Then there was a material used for a fixed asset for installation. So from purchase, your journal entry is fixed asset account debit to purchase. So less fixed asset rupees 50, and in fixed asset account, the ledger that I have opened, I am to write here as to purchase account rupees 50. Then you have to allow interest on the opening capital for 5%. So first of all, we need to find out what is the opening balance of capital, and then we will charge interest on the opening capital. So before that, let me show the opening balance sheet, the transactions that I have recorded till now. So please compare with the solution that you are recording in your notebook with the figures on the screen. So this is the opening balance sheet here. You can compare with the solution that you are recording in your notebook, and this is the structure of the closing balance sheet. Then this is the structure of the trading and profit and loss account. I have recorded the opening and the closing balance of stock, the total sales, total purchase. From purchase, I have reduced the amount of drawing for rupees 500 and the fixed asset of rupees 50. And in profit and loss account, I have recorded the general expense of rupees 1000. And beside this, I have opened the debtor account. You can see the figures that has been recorded in debtor account, creditor account, fixed asset, and in the cash account. So now you have to close the ledgers that you have opened. So first ledger that I have to close is the debtor account, and you have a balance on the credit side, and the balance is regarding the cash collection from debtor, which is the balancing figure, and the amount is rupees 6,000. So total of debit and credit side is 14,800. And the cash collection from debtors will be recorded in the cash account. So I have to write here to debtors account rupees 6,000. Then we have the creditors account that you have to close, and the balancing figure is on the debit side, and this is regarding the payment made to creditor. So to cash account, and this is the balancing figure, and the amount is for rupees 2,000. So 3,950 is the total of debit and credit side. And in the fixed asset account, the balancing figure represents that amount of depreciation. So I am writing the balancing figure as depreciation 950, and the total of the debit credit side is 2,690. And I have forgotten to record the transaction regarding payment to creditor in the cash account. So in the cash account, I have to write by creditors account rupees 2,000. So the debtor account I have closed, then the creditor account, fixed assets, and now it's time to close the cash account. So you can see that the total of the debit side is 6,500, and you will find a balancing figure over here on the credit side, and this represents the opening cash and bank balance. So I have to write as by balance BD, and this amount is 250, and the amount is rupees 240. So basically this is the bank OD, you can say, and this is the balancing figure. I am writing this for your understanding. So the transactions that has been recorded in the cash account are the opening balance of cash and bank, that this is basically the bank OD 240, then cash purchase 2050, then I have made the general expense of 1000, then drawings, cash drawing of rupees 300, purchase of fixed asset 500, and the payment made to creditor for rupees 2000. So the opening bank OD will be recorded in the opening balance sheet. So I have to record it on the liability side as bank OD for rupees 240. Now you have to close the opening balance sheet, and I have a total of 9,140 on the asset side, and I have to write this as opening capital, and the balance of opening capital is 7,400. So this is basically the balancing figure. Now it is given in the question that you have to charge interest on the opening capital. So in the profit and loss account, I have to record to interest on capital 7,400 multiplied by 5%, and the amount is 370. So to interest on capital 370, and you have to record it in the closing balance sheet. So in the closing balance sheet, I have to record interest on capital, and basically this is the amount payable. So on the liability side, I am writing interest on capital rupees 370. The opening capital that I have calculated from the opening balance sheet, I have to record it in the closing balance sheet also at 7,400. Now it's time to close the trading account. So you can see I have recorded opening stock of 1,700, the closing stock of 1,900, total purchase is for rupees 3,950. Total purchase is 4,500, and from purchase I have to reduce the amount of drawing and the fixed asset rupees 50, and the net purchase is 3,950. So you will find a gross profit of 6,250, which is the balancing figure in the trading account, and the total of the debit and credit side is 11,900. I have not recorded the amount of depreciation. I forgot to record the amount of depreciation that I have already calculated from the fixed asset account, and I am writing now because I have to record the amount of depreciation on fixed asset. So this is a mistake that you should avoid, and any transaction, any amount that you are recording it one place, you have to simultaneously post it in the another place also, because every debit amount has a corresponding credit amount. So depreciation on fixed asset is 950. So the gross profit I have to brought down from the trading account as 6,250, and the first item is general expense of 1,000, then interest on capital 370, then depreciation on fixed asset 950, and the net profit is 3,930. So you have a total of 6,250, that's total of debit and the credit side. And the net profit will be recorded here, and the net profit will be recorded here in the closing balance sheet as net profit 3,930. Opening capital was 7,400, and from the opening capital you have to reduce the amount of the drawings. So this is 6,600, and then you have to add up the net profit, and the closing capital is 10,530, and the total of the liability and the asset is 12,850. So hope all the students have recorded the question with solution, and please try to follow the way I have solved this question. In spite of this, if you find any difficulty in understanding, feel free to communicate with me through email and the contact number given in the description box. Thank you. Thanks for watching the lecture.